Hello and welcome to Stockwatch, presented by me, Evan Lucas, for Go Market Securities. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none are relied upon as any form of personal advice. Go Market Securities does not know your personal scenario, nor your personal financial goals, and therefore none are relied upon as any form of advice at all. It's just general in nature only. Metcash, a company I don't normally talk about, but I think you have to, considering that there is a clear distinction now between staples and discretionary. Because the numbers that they delivered this week saw the share price jump over 5%. Now, this is a company that has been beaten up in the past. It's always seen as the troublesome third brother against Woolworths and Coles. But in saying that, you can't deny that the first 7 weeks of trading, food was up 6.5%. In fact, it was 6.8%. And with inflation, it's 8%. That's stronger than most people expected. Hardware sales are seeing a slowdown from DIY, which is what you would expect, but Total Tools and their wholesale business is doing slightly better. Corporate and interest costs are elevated due to inflation, but that's been offset by better than expected food. And that's the key headlines. So let's go through the numbers even more so. Looking at retail sales like for like, IGA Network were up 0.9%, or 3% ex tobacco. That's pretty impressive. Shoppers, they've flagged, have started to move away. They are going down the value route, but they've been seeing that throughout the calendar year this year. Average size of the basket is flat, which is also impressive considering what's going on. Wholesale inflation at 7.6%, it's what you'd expect. But overall, margins of 2.1% were better than expected, even though they've got rising labour and freight costs as all. Hardware, Total Tools up 3.8%, DIY sales only up 0.6%, but overall total sales for their home brand was up 2.7%, Total Tools 4.8%. It's been a really good acquisition, Total Tools. Just be aware that in FY24, there's a $95.8 million put option becoming due. They're going to take it. I mean, the business is doing incredibly well and they're going to need it. So just be aware that might hit cash flows. But overall, the hardware division is doing relatively well despite the fact that construction's down. Then the main one, liquor. Total sales up 8.3%. Growth in on and off premium sales is impressive. It's done by their actual internal brand, which saw as much as a 17% increase versus last financial year. That's really interesting. It also shows you a bit of the customer change. And that's what I really want to talk about here, is that Metcash is that. You can see the customer change inside it. Coles and Woolworths are doing the same thing. What it also shows you is this. Money is going away from discretionary, and that we already knew. But this result from Metcash tells you that. And again, it's not just about talking to you about Metcash and the fact that they've done better than expected. It's what's happening in other parts of the market that really come to the fore in this result.